and doing this, and we're doing that. We got that good go. Oh, look who we have over here. Hello, hello. Just getting ready to get started. Hold on, hold on. Oh, gotta get this thing up and running. Get that thing up and running. Start streaming. There we go. And do this right there. There we go. Here we go. And here we go. Damn, I need a pair of glasses. No glasses tonight. Oh well, just gonna have to make do without it. Give me a second. I'm gonna run and see if I have them. Woohoo! Pair of glasses. That way I can read the board. All righty, who do we have tonight? Hello, hello, hello. Oh, wow, a lot of people, a lot of people, a lot of people. Here we go. Chef Patrick, what's going on, Chef Patrick? Troy, good evening. Douglas, good evening there, Douglas. Psalm 118, how you doing? Deanie, what's going on? Tiger, Hilton. Tivins, okay. Trip with B, okay. Nolan, good evening. Kimberly, good evening, good evening. What else we got over there, over there? Oh, Sammy, good evening. Pub Girl, Eric. Larry, Kev. Paul. Jay Peru, good evening. Dylan, yes, Dylan, it's late. I just, actually, believe it or not, I just landed about a half hour ago. Took a half hour to get home. Dr. Dev, how's it going? Chino, what's going on? Random, what's happening? CPM, what's going on? Pub Girl, back Peru, everybody said that. Rob, good evening. Louis, Mooncat, Thomas, Luis, Rob Luis. JFM, good evening, good evening. All right, good evening, good evening. Dev, what's going on? Sorry to hear about that, Dylan. Okay, good evening. I had to roll Marvel again, and I'm losing my 1% for 2 weeks now. See, Dylan, this is why you actually got to leave me your number. I give you a buzz, so see what it is you're doing wrong, dude. All right? You're late. Links. Yes, my plane landed a half hour ago. I just flew in from Vancouver to Texas and Texas to here. Okay? 9 hours on the plane. So, fun. Can you please shout out my friend Hugh? What's happening, Hugh? Yeah, I ain't falling for that one. Let's not be childish, okay? Hi, mister. What's going on? Kalo, Jim. Wow, Links. Hey, how you doing? I'm doing wonderful. Dylan, you haven't called him. No, you can't call me Dylan. Actually, the funny thing is, Dylan, you are on YouTube, which my phone number is actually in my bio on YouTube. But you actually got to send me your number. I'll give you a buzz. Vi TV, Viet TV, Vagabond. Oh, Viet Vagabond. Okay, talk about Oracle. We will. Hold on a second. Was there another Hugh in here? Yes, there was, over on the other side. But he's just being a childish, if you ask me. Is bro even looking at TikTok chat? Viet Vagabond. That's a weird thing for you to ask if I'm reading what you're saying. What are we doing here? TS, we're investing in dividend stocks for weekly cash flow, looking for a simple, safe, predictable, consistent 1% per week used in nothing but pre-qualified dividend stocks, and those are companies that consistently increase their dividends for at least 2 decades. But if you hang out a little bit, you will see what's going on, so ask some questions, see what we're doing. Burbot Luche, rest in peace, Charlie Kirk. What does that mean? Did something happen to Charlie Kirk? I thought TikTok chat was very delayed. No. It's not that it's delayed. I have 6 different screens going, which means I have different things. Wait a minute. What do you think about Nancy Pelosi's 54%? You mean, don't get me started on politics. Because we all know Nancy Pelosi cheats. Okay, she has insider information and she uses it. He got killed. Did he really? Charlie Kirk got killed? Holy shit. He was stirring up quite a buzz. I'm sure the powers that be did it because, he can't be bought. Well, couldn't be. Saying stuff that don't want, yeah, assassinated. Holy cow. Holy cow. Well, that's horrible. Horrible, horrible. Utah Valley University. Well, what's this? Gold, how are you doing today? All right, gold, what we're doing here is we're investing in dividend stocks for weekly cash flow, looking for a simple, safe, predictable, consistent 1% per week, using nothing but pre-qualified dividend stocks. Hang out. Everything will be answered as we progress. I'm just getting started. To an amazing man. Oh, wow. That's horrible. Dylan, no hate. Shot from 200 yards away. Nice lipstick. Yeah. It's chapstick, you wiener. Don't be a child. Come on. All right, let's keep on moving on. All right, so for those of you that are new here, my name is James. This is Dividend Stock Talk, where I invest in dividend stocks for weekly cash flow, show you exactly what I'm doing. It's a simple, safe strategy that I created for my 9-year-old daughter. Now, for those of you returning again, welcome back again. I apologize I wasn't here yesterday. I was in Canada looking at a boat. We have a new adventure going on. We're actually going to take our show on the road. I should say on the water. Okay. So that being said, it's something that we're working on for the new year. So that ought to be fun. All right. So that being said, let's get going. What we're looking for here. You're going to give me some stocks to take a look at. I'm going to show you what my strategy is. Remember, I said it's simple, safe, predictable, consistent. What I'm looking for is 1% per week. That's what I'm looking for. Now, that's over 50% per year. And I don't know the last time you guys, he had a pretty good escape route planned. I have no idea what that means, but okay. What does NOI mean? I have no idea what NOI means. Oracle had 35% on a day return. Okay. Thank you about that, vagabond. What's your take on American Eagle? We're going to look at that in a little bit. I took the short and got killed. Why would you do that? Okay, haven't you been paying attention to the news? American Eagle is like in the news. People bitching and moaning, and that what's her name? That blonde girl who just seems to be going up rather well. We'll take a look at American Eagle also, and we'll take a look at Oracle. India, this isn't the place. Okay, why is everything backwards? Good question. Now, if you know, you specifically on YouTube, if you know how to mirror the image on YouTube, I'll be more than happy. I'll be grateful that you actually helped me fix it. Opinion on BlackRock subsidy CEO assassinated. That's the second person got assassinated. Holy cow. What's the world coming to? All right, so let's get started. First, for those of you that are new here, like I said, my name is James. This all came about over 15 years ago in 2008 when my 9-year-old daughter said, "Daddy, what are you doing?" 9 years old. And then she blurts out, "Can you teach me?" Now, my 9-year-old daughter wants to learn how to invest in the stock market. I said, okay, great. Let me figure out something for you. So for a 9-year-old, it has to be simple, safe, predictable, consistent, and no way for her to lose. That's the 5 criteria. Okay, great. So how do you create a trading strategy for a 9-year-old? Well, I got 5 rules. You ready? Here they come. Number 1, never buy something you don't want to own. If you don't want to own it for the rest of your life, don't buy it. Bro bought stocks at 2008 when everything is a discount. Dude, can you just chill? You're new here. So just sit back, relax, listen, and see if it makes attention. Then if you want to have these snide remarks, then okay. But as a new person here, it's kind of rude to say stuff like that when you don't know what's going on. Now, as I was saying, to create a trading strategy for a 9-year-old, simple, safe, predictable, consistent, no way for her to lose. So the 5 rules. Rule number 1, never buy something you don't want to own. Number 2, Never sell at a loss. Number 3, make sure the company's consistently profitable. Number 4, make sure there are weekly options only. Now, when I say I want weekly cash flow, you have 2 choices and only 2. Trade something that trades on a weekly basis, hence the reason for weekly options, or 2, sit in front of the computer. We don't need to see this. Get rid of this. Get rid of that. Put this up right there. Okay. As I was saying, 2 choices. Trade something that trades on a weekly basis, weekly options, or 2, follow this thing every day and do some day trading. That's the only way you're going to get weekly cash flow if you trade consistently. That being said, I like weekly options, specifically weekly options on profitable dividend stock companies. Now, I don't like the capital gains companies. Those are the ones that just, they go up through the roof for a reason. Okay, you got 2 different kinds of companies. One is a company that takes all the profits and shares it with the investors. That's you and I. That's cash flow. The other companies, those are capital appreciation stocks. That's where you put your money into the stock. They take all the profits, they put it back into the company for capital growth. Okay, there's no income there until you sell. Well, that's not what I'm looking for. I'm 61. My income has to come from somewhere. Okay, so I retired at 59, which is 2 years ago. And the money that I have accumulated in my working days has to go to satisfy my monthly obligations. We all have monthly obligations. We're the only species on the planet that's got to pay to live here. So yes, you got 2 choices when you get to my age. Choice number 1, buck up, buttercup, learn to do it yourself. That's it. Buckle down, learn to invest yourself. Number 2, you can give all your money to a money manager or a fund manager or someone to take care of it for you. But here's the thing. I can almost guarantee with 100%, pretty much over 80%, most people you give your money to do not have the same amount of interest in your money as you do. And I can almost also guarantee they're not going to give you the rates of return that you could learn here. 1% a week comes to over 50% per year. I've never seen a money manager offer more than 10 or 20%. I could be wrong. There are a few that do better than that, but it is what it is. All right, so let's keep on looking at what we're doing. Viet Vagabond. You got to give me this ticker symbol for BlackRock because I don't trade BlackRock, so I don't know it off the top of my head. Basically, I don't trade it because it just doesn't fit. All right. Over here, yep, that's horrible. I do way better than that. Awesome! He's a father, son, uncle, husband, brother. Okay, alrighty then. So user 10290517788149. I'm kind of curious what his parents were smoking when they named him. So you're doing way better than 50% per year. I'd love to hear it. Really, I would. Okay. That being said, I'm looking forward to tonight's stream. Thank you, Dev. We have no interest in this channel. All right, Mel, we'll just delete you then. I don't need you here. All right, that works. Righty. It's Mark Cuban. Yeah. Please, God bless all the people in this chat. Thank you very much. Thank you. Jen Pinka, good evening, back again. That user is a liar. Probably. I take stock in highly concentrated positions and Bitcoin. Yeah, well, you have fun with that. Okay, I'm a little bit on the safer side, more conservative. Okay, now my guess is if you're investing in highly concentrated positions and Bitcoin, my guess is that you are not in your 60s and 70s and being retired. That's just a guess, because number one, Bitcoin, it may be the future, but at this moment in time, it has nothing behind it to back it. Wink and a smile from a stranger across the universe. We don't know who's at the other end of that Bitcoin. because it doesn't have gold behind it. It doesn't produce a product. It doesn't have a leg to stand on, so to speak. And it doesn't have any historical performance. Terribly sorry, but I like companies that have been around for at least 2 decades. Bitcoin hasn't. Okay? How many SCHD should I need? Uh-oh. All right, what do you think of DAF? Brokerage. I have no idea who that is. This is my bedtime. Sorry, Dylan. Where were you last night? I was in Vancouver looking at a boat because we're taking the show on the road next year. Actually, taking my whole studio, putting it on a boat and going from one town to the next, to the next, to the next, all around the United States. We're starting up in Canada, which is the northeast or northwest. Okay, we're going to take it all the way down the west coast, through the Panama Canal, all the way up through the Gulf, around Florida, and then all the way up into New England, and then through the Great Lakes, down the Mississippi, and back home to Florida. That should take me at least 2 years. I'm giving you a 2-year commitment. That's what I'm going to do. Anyway, so let's get started. First one on our list today. Dylan, didn't you say something about Marvel? Was it Marvel, Dylan? Which one was it? Do I like geopolitics? I don't like politics at all. He was having a party in another country. No, I wasn't. Okay, I went up there, I looked at the boat, went in the hotel, came home. That was it. I was there for not even 24 hours. So in 2029, Bitcoin will have 2 decades. Will anything change? Well, between now and 2029, yeah, 2 decades, fine. What's going to change? Well, we all know something's going to happen. And this is why I say I don't want to get into politics, because we all know something is happening. Something. Someone's pulling some strings in the background. Don't know what they are at this moment in time. You know, it is what it is. Things are changing. Did I like the boat? Yes, I did. If I sent you in World War II, what you'll do there? Why don't even. I rolled Marvel to 69 for next week from 68. Why did you change the strike price? When you change the strike price, you lose money. Thank you for doing these streams. It's educational. Thank you. All right. So Marvel. Let's take a look at Marvel. That's the one he's talking about. So let me show you how I do it and then see if it makes sense. Because first and foremost, out of all of this, I want to see if you guys make sense out of this. Is what I'm saying make sense? Does it make sense? Yes or no? I'll get it out eventually. I guess I'm overtired. I've been up since. Anyway, Marvel. All right, go by the numbers. A, B, C, 1, 2, 3. I do things systematically. Okay, if you check my videos from years ago, it's always the same. I look at the 1-year chart first, the 90-day, the 30-day. Then I look at the numbers and say, does it make sense? Well, let's take a look at Marvel. Here's the high right here back in January. Here's the bottom right here in April. A year ago, we're at 70. Now we're at 67. Okay. What did it do? Up, down, up, down, up. Okay, so it's in an upward trend at the moment. All right. What's the number? The number is 67.10. So if I'm going to buy this, and I'm going to want a profit, and a safe, predictable profit, okay, I want to sell somebody a covered call. Now, if you don't know what a covered call is, it is buying a stock and selling it at a certain price by a certain date and collecting a premium. The premium is the key here. That's what I want to collect, because the premium, see the stock right here, 67. That's the price, 67.10. So 67 is going for 191. Okay, that is over 3%. So the premium is what I'm looking for. So if I buy it at 67.10 and I sell it at 67, yeah, I'm losing 10 cents. But if I take the 10 cents off of this, I'm walking away with 181. Well, 181 is just a tiny bit less than 3%. Well, 3% for 1 week, you know that 1% is 50% for the year. 2% is 100% at the end of the year. 3% has got to be at least 150% at the end of the year. Well, when's the last time you got 150%? Consistently and safely. You got to remember that, safely. Because I created this for my 9-year-old daughter. And we all know if a 9-year-old starts losing money, she's going to start crying. Daddy's going to feel like crap. Mama's going to get involved. I'm sleeping on the couch. Harry for good. How are you today, Harry? Okay. Rob, what's the highest percentage on one call you made in a week? All right, I'm not even going to answer that question. My goal is 1%. Anything over 1%, great. I recovered a lot rolling, but I'm missing out on my 1%. Now, Dylan, again, I'm going to say the same thing I said a little while ago. If I don't see what it is you're doing, I can't really help you out. Because if you're buying it here, selling it here, this is what the number is. If the stock goes up over 67, someone's going to take it away from you, and you get to keep this profit, and you get all your money back. So I don't know what you're doing. Okay, I promise you. You send me a number. I promise you, I'm not going to try to sell you anything. I sell it to everybody. You want to chat? Fine. I love chatting with people. Okay, we're actually setting up a calendar for people to call in. And I'm going to take 4 or 5 calls a day. That's about it. Okay, and whoever wants it, hey, just call and we'll talk. We'll chat. See what you're looking for. See if I can help you out. Dev, never sell at a loss. Thank you there, Dylan. I like watching your streams. My dad punched me, though. Why would your dad punch you? I guess he's, you know what? I have no idea why he did it, but it could be, perhaps, he's punching you, waiting for you to man up and hit him back. That could be it. I don't know. Could be. Because I remember the last time my father raised a hand to me, and I remember the last time my mother raised a hand to me. It's called becoming a man. Did it? That's what it is. Think about it. I'm sure a lot of you out in the audience remember the last time you had confronted your mother or your father. It's called becoming an adult. Josh, the question is, can you cup and handle the markets at the money? Josh, now I understand what you're talking about, cup and handle. I understand that. I'm going to repeat this slowly, she'll get it. I'm only showing what I taught my 9-year-old daughter. It's simple, it's safe, it's predictable, it's consistent. And if you do it right, you can get 1% a week. 1% a week is over 50% per year. You want to get into complicated stuff like reading the charts, looking for signals, that's a whole different ballgame. Because then you're thinking the MACD, the Elliott wave, the RSI, retracement rules, Fibonacci's, a whole bunch of crap. It can get very complicated. So when I say simple, safe, predictable, consistent, and no way for my 9-year-old daughter to lose, that's what I'm teaching here. Okay, I do not teach all that other stuff here. Okay, because that's a lot more brain capacity. Okay, I'm talking on a 9-year-old level. It's simple, it's safe, it's predictable. If 50% a year is not enough for you, I can't help you out. Dylan, I've rolled it multiple times this week. You should only roll it once a week, dude. But if you can, go ahead. What's your favorite part about scamming? Hey, BH. We got a scammer here, BH. He's trying to scam us. Okay, great. Thank you for letting us know what you're doing. All right. Anyway, let's keep on moving along. So the first one we're looking at is Marvel. Here's the high, the low. We already did all that, okay? What I want to do now, because we've already checked the numbers, at 67, the 67 is going for 191. So let's see if it is going to be a contender, because it looks like it. By looking at the 1-year chart, it's simple. High, up, down, up, down. Now it's going back up again, and it gapped down. I love a gap down. Gap downs have a tendency to fill. Oh, why is this not working? That one's working. Ow. Let's switcheroo. Low battery. Low battery on my YouTube. All right, there we go. All right. So, let's look at the 90-day. Before we do that, glasses. Here we go. Marvel a year ago was at 69.39. The high of the year was at the end of December. The low of the year was right there in the beginning of April. Well, here we go. High, low, where was it? Where is it? Look at this. Up, down, up. This is the gap that we're talking about. When a stock gaps down like that, it hits a bottom, bounces back up, and this gap has a tendency to fill, which looks like it's almost filled. So let's keep on looking. That's the 90 days. Okay, 30 days. Now, the reason I want to look at the last 30 days, because the last 30 days gives me a good idea of where it might be going next. Well, it's not that difficult to see. High, low, where was it? Where is it? Up, down, up, drop, up. Okay, up, down, up, down, up. That's simple. Don't overcomplicate it. Adults, you guys, have a tendency to make it more complicated than it needs to be. So logic tells you it looks, here's the bottom, 2 days the upside on the third day, and she's going up. Well, great. Let's see what the numbers look like if you actually like Marvel. All right, we don't want that one because it's only 2 days left. Right here, here's the 67 right there. Wrong one. Got to change this first. There we go. Now here's the 67 right there. Okay. Now we're going to do just one contract so you understand what one contract looks like and sounds like. And if it's profitable, what it should sound. So that way you don't make a mistake if you want to do this. All right. Buy one covered call, Marvel, 100s. That's the weekly options. 19 September 25. That means this option is going to expire next Friday. Not this Friday, next Friday on the 19th. That's the date. 67 call, well, that's the price I'm selling it for. I'm buying it for 67.10, selling it for 67 at the market to open. Okay? I'm making 183. Now, remember when I said simple, safe? Well, a covered call is one of the safest trading strategies there is, and it is actually really simple. Also, it's one of the very few trading strategies that you can actually do in your IRA. So if the federal government says you can do this in your IRA, which they don't let you do just anything, it's safe enough to do in your IRA. And simple, safe, predictable. Remember that? Simple, safe, predictable. Well, I know what I'm going to make, max profit, 183, before I even do the trade. Now, the easiest trading strategy is just to buy the stock. But the problem with that is when you buy the stock, there's no money there because you have to sell something in order to have a profit. Dylan, when it hit Monday, 63, I sold the 65s. Had to roll so I could close the 68s for next week. Then I rolled again to 69 for the next week, and that ate up my profits since I didn't go out another week. All right, Dylan, what you're missing, I'm going to show you in a minute, but sit tight. Before we go any further, profit, 183. Cost of trade, including commissions and fees, 6,500. Dylan, I'm going to address that in a couple of seconds. Let me just finish this example, show people, and then we're going to go directly to that issue that you're having. All right, so sit tight. Calculator. Need the glasses again. Calculator. All right, so to find out what your profit is, to find out what your rate of return is, because your profit we already know, 183 per contract. Come on. All right, had to get that cord out of the way. Okay, that's good. All right, step on the cords. We know what the profit is, 183. So I'm going to put the 183 into the calculator. I'm going to get dizzy moving all around. 183. All right. Find profit, you take, find out the rate of return, take the profit, 183, divided by the investment. 65.17. 65.7. Let's try this again. Divide 65.17. Here we go. 2.8%. Remember I told you it's just a little bit below 3? 2.8. 2.8% a week is over 150% per year. I don't know the last time you got 150% per year, but I like getting it. Okay, I don't get it all the time. My goal is 1% per week. I can live comfortably on 1% per week. But if I can get 2.8, I'm happy with that. Dylan, this is what you're missing. Okay? Now, if you're not making the money you want to make on this, okay, you might not always get 1 or 2% on the week. You might take less than 1%. That's fine, because every once in a while you'll get 2, 3, 4%. Now, let me show you what else you might be missing. Let's get rid of this. Let's get rid of this. Get rid of that. All right. Dylan, you ready? This is IBM. Hold on. Let me show you the chart. IBM. All right. This is my position on IBM. Dylan, same. I'm in this almost the same boat that you're in, but just listen and go through one step at a time. IBM, it's currently at 256. Okay, this was a year ago. Here's your high, here's your low, here's where it is, here's where it was, see? Up, down, up, down, up, down, up, down, up, okay? Now, I'm in at 285, which is up here. Let's zoom in a little bit. Okay, the high, 296. Let me come over this way so you can see me. I'm in at 285, which is right about here. Okay, stock dropped way down to here, to 240. Now it's coming back up again. Well, let me show you what I did. Okay, here at 285, I sold the 285s because it made sense. And then this happened. Big drop. Now we're down at 260. I still own it at 285. So now it's at 260. So I didn't sell the 260s because that's too close. I sold the 263 or 264, something like that. Far enough away to give enough wiggle room, but not too close where I actually be called out. Now, it dropped again. So I sold the 245s right down here. We're at 240. I sold the 245s, which are right about here. Okay? Then the stock jumped up. So I sold the rights for someone to buy it from me at I think it's 245. Let's go check it out. Yep, right there. All right, ready? 285 is my average price. Okay, now, when you increase the strike price, the premium drops. And if you increase it too far, it drops so low that you actually have to pay money to roll it forward. I try not to decrease or increase my strike price. What I do instead is I take the strike price as low as it is and I push it forward a few weeks. The reason why I'm doing that is I still sold the 245s right here. All right? It still says 9/10, which is, I think it was today. Yeah, it's today. 9/10, which is today. I put the 245 and I rolled it out to October 30, the 3rd of October. That's next month. Well, the reason why I did it, because the premium really wasn't that great. But what was? This right here. You see that? That's what I sold it for. $16.84. So there's somebody somewhere at the other end of the equation. They paid, they paid $16.84 for the right, not to buy the stock, but just the right to buy it. So they have the opportunity to buy it from me. But here's the catch. Now this is why you call me and we have a conversation and I can give you more detail. But just pay attention for a second. I'm in at 285. The current price is 256. Okay? Bought at 285, it's at 256. I sold someone the rights to buy it from me at 245. That's $11 loss. Or is it? Okay? The premium, $16.84. Somebody paid that $16.84 to buy it from me at 245. Now, are they buying it from me at 245? No, they are not. You have to take in consideration, what is the premium? Well, the premium is the option price. $16.84. You take that $16.84, whatever the average price was, and you add it to the strike price. So even though they have the rights to buy it from me at 245, what are they actually paying? 245 plus 1684. All right, so they're actually paying 245, 1684, that's 261. 261.84. That's what they're actually paying to take it away from me. So when you sell an option and you roll it forward, well, rolling it forward, you have to buy back the current one and sell the next one out. So then the one that you're buying back and the one that you're selling, the difference is what I get to keep. Well, I got to keep some money. Great, good for me. But whoever is on the other end of the equation, because there's always somebody buying it, whoever bought it, they paid the premium. You take the premium, you add it to the strike price, that is the break even. Well, the break even on this is 261.84. 261.84. What's the stock at right now? $256.88. Now, does it make sense for someone to buy it from me at 261? No, it's at 256. Why would someone pay 261 when they can go to the open market and buy it at 256? So it's not just a strike price you have to be concerned about. Okay, it's the strike price plus whatever they prepaid. So you add those two together, that's their break even, not my break even. I know what mine is. If someone's going to buy it from me, their break even is 261.80, whatever the hell it was. That's just a break even. Well, they're not going to buy it to break even. They're going to want to turn a profit, which means this thing's going to have to hit at least 270, 275 before someone takes it away from me. So I'm kind of safe. What's going to happen? Well, you got your bottom here, okay? And she shoot up here. So the bottom is right here in the 238 area. Now we're at 255. Well, that's $20. Well, $20 on a $240 stock is just a tiny bit below 10%. So how high up is it going to go before it drops? They all drop. All of them. All the time. Not a single stock I've ever, and I've been doing this for about 30 years, not a single stock have I ever seen shoot up and keep on going. No, they go up, profit taken, up, profit taken, up, profit taken. You have to pay attention. What did you buy it for? What did you sell? What's it at now? What does it mean? Are you in a profit? Are you in a loss? What should you do? That's why people jump in the morning trading group, because I walk you through it. I'm not right all the time, but here's the thing. Is it worth it for you to be able to have someone that shows you, okay, the price is $285. Okay, I can't change that. Well, I could do dollar cost averaging, but that's not what I'm going to try and tell you. I'm not going to tell you to buy more. That just doesn't make sense. $285 is the price. Now it's at $250. I'm down $30. However, if I roll it forward 1 week, 1 week, 1 week, 1 week, and I slowly get 1%, half a percent, I will do that every single week until it gets back up to 285. Because me personally, I refuse to take a loss. Now, I've done about 1,500 trades this year so far. I lost 4 times. Sorry, I don't win them all. I don't think anybody wins them all except for Pelosi. But she cheats. I don't cheat. If I lose, I'm going to tell you I lost. I'm going to tell you why I lost. But for the most part, I hate losing. So I do trades. Some people say, it's not enough money. 1% is not a lot. A lot of people say 1% is not a lot of money. I don't want to do that. It's too much time, too much effort for a lousy 1%. Well, I'm perfectly okay with it because it takes me less than 5 minutes a day. 5 to 10 minutes. That's why it's called the 10-minute trader. Every video you ever seen, hey, this is James from Dividend Stock Talk, brought to you by the 10-minute trader. Okay, it's designed for a 9-year-old little girl to do in less than 10 minutes, simply, safely, predictably, consistently, and no way for her to lose. That was the strategy I created specifically for my 9-year-old daughter. Less than 10 minutes. Because how do you keep it in at the attention of a 9-year-old? It's got to be simple, safe, and it has to be entertaining. So yeah, we had a lot of fun doing it, but here's the thing. Profitability is what we're looking for. If you don't have 5 or 10 minutes to devote to your money on a daily basis, it's kind of like having a pet. If you don't feed your pet and water your pet, take it for a walk, well, what do you think is going to happen? Same thing with your money. Because you, as being a fellow human, have to pay to live on this rock, planet, whatever you want to call it. We're floating around in the cosmos, and we got to pay to live here. Your money's got to come from somewhere. When you retire, you got, like I said, 2 choices. Do it yourself, give it to someone else. All right, so Dev agreed. Should have stayed at 66. Yep, time is money. Thank you, Dev. Live and learn. What's a good entry signal for me? Now, for me, the entry signal, let's get back to where we were, and I'll show you my entry signals. Where are we? Okay, let's get back to trade and back to here and back to this account, and there we go. IBM. Where did IBM? All right, we need another stock. Who's got one? Bum, 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 bum. Take the stock. Okay, I saw that one. All right, what? APO. Wow, I got all these questions over here. Pat, give me a second. I'm reading the questions over here. I try to do as many. What do I think about DAF brokerage account? I have no idea what that means. How many SCHD do I need? Okay, users 576100. Okay, whatever. I don't like SCHD. I don't. Let me see. What are they? SCHD. Are they a monthly? No, they're not. They're a weekly. Okay, so this is why I don't like SCHD. Let's go here. SCHD. Now, where we're going now is Yahoo Finance. If you're going to be investing, you need to have access to a financial website where you can do some research to see, is this a good company or is it not? So here we are. Somebody wants to take a look at SCHD. I don't know why. I do know why. This is one of those things heavily marketed. It's like, oh, you want to invest? Here, buy this. And then they ram it down your throat. And the reason I say that is because I think it's just a piece of crap. But that's just my opinion. Okay, so what I'm looking for, user whatever, I'm looking for consistency of profitability, 2 things. Consistency of profitability and the preservation of my capital. Now, when I say I want companies that have 2 decades of profitability, SCHD is only 2011. Not quite there yet. What is that, 15 years? Wait a minute, 14. Yeah, 14 years. That's it. That's not quite 15. It's not quite 20. I'm looking for 2 decades, 20 years. So why don't I like it? You ready? Let's take a look. Now, when I say dividends, a dividend is a portion of the company's profits the company gives back to the investors, and that's us. We buy and sell the stocks. We become stockholders. We become owners of the company. Small owners, but still, we are entitled to our portion of the profits. If the profits keep increasing, the dividends increase. So you got 2 choices. read all 20 years of quarterly reports and annual reports to see how profitable they are and all the other interesting information, or just go straight to the dividends. Because if they're profitable, they pay out a dividend. And if they make more money this year than they did last year, the dividend's going to be higher. Every single year, if they make more money, the dividend gets higher and higher and higher. It's just the way it goes. You make more money, you pay out more money. You start losing money, you pay out less. So if the dividend goes down, that means the profits went down. Dividends go up, that means the profits go up. So go straight to the dividends and count them. You ready? 2011, 4.0, 4.6, that's up. 6.8, 6.9, 8.6, 6.6, that went backwards, right? 8.6 to 6.6. Now, it doesn't sound like a lot, but think about it. 8.6 to 6.6. 8.6 to 6.6. That, my friends, is a 25% loss. Doesn't sound like much. It's only 2 cents. But 2 cents on an 8 cents, that's 25%. Did you hear that? 25%. And that's just once. Hold on. Here's right here. Okay. Next. So it went from 66 to 75, 77, 83, 82. Just in case you're wondering, that's backwards again. 83 to 82, backwards. 89, 84, again, backwards. That's 3 times. 91, 90, backwards again. 10, 9.9, backwards again. 9.0, backwards again. 9.9, 10, 8.1, yeah, backwards again. 13, where was it? 13 right here. Okay, so it went from 13 to 10, backwards. 11, 11.4, 11.5, 8, backwards again. What are we up to, like 8 or 9 times? So the reason I say I don't like SCHD is they're not consistently profitable. 10 to 8, backwards. 13 to 10, backwards. 11, 11, 11, 8. 11 to 8, that's $3. That's, sorry. That's 3, 11, 8. Not quite, let's call it like 22, 23%. 8, 13, 12, backwards. 13, 11. Do you see the pattern? Up, down. It's like 3 steps forward, 2 steps back, 2 steps forward, 1 step back. I don't like SCHD. They're not consistently profitable, and they're not 2 decades old. Okay, we check every week. This week there's 10,371 companies. That's a lot. Why are you putting into SCHD if they're not profitable? Do you know why? Because it's heavily marketed. Because they have a lot of money behind it and they want you to buy it. Let's go to the next one. Next. Thank you. Boomer says this shit is hilarious. Bar down on 360. Okay, thank you. Do your research. Yeah, that makes sense. Do your research. What do I think of APO? What the heck is APO? APO. Well, let's see. Who is APO? I have no idea who they are. Apollo Global Management. Okay. 11. Same thing. Only 2011. Okay. 22, 24, 20. That's backwards. 46, 25. You go 46 to 25. And you think that's good? Come on, really? 24, 40, a buck. 57, 132, 101, 108, 84. Yeah, I'm going to say no to Apollo also, APO. When I say, all right, hold on. You might need to see this because some people just don't get it. MSFT, Microsoft, just in case, you know, you want to see a good one. All right, look at this, 2003. That's more than 20 years. I'm good with that. 8, 2006, 9, 2007, 10, 2008, 11, 2009, 13, 2010, 16, 2011, 16. That's it, 10, 11, 16. Okay, 11. All right, 20. Sorry. 23, 28, 31, 36, 39, 42, 46, 51, 56, 62, 68, 75, 83. Did you notice that? Each and every year, it higher and higher dividends. That is why Microsoft is a dividend champion. 25 years or more of increased profits. It's actually that simple. You go and you take a look at how consistently profitable are they. Well, I don't care if they're in the news. I don't care if they have a hot product. I don't. I seriously don't care if they have a new product or they're in the news. Or someone says, hey, you got to buy this. No. Do your own research. Don't fall for that crap that they're trying to sell you. Do it yourself. The information is free. Just go find it. Okay? Yahoo Finance will tell you almost anything you need to know. And then do a safe, simple strategy. Okay. What do we got? Have you ever used FTHY for an investment? I have no idea what FTHY is. Bar down on 360. It has a fixed supply. It has been around close to 2 decades, and it has no historical performance. So why would I be looking at anything with no historical performance? Was Microsoft always around for 2 decades? Apple, Google? Yeah, they were. Funny thing is, Microsoft has over 25 years. 25, that's a quarter of a century of consistent profits. Apple doesn't. Apple's been around. Now, the only reason I invest in Apple is because Warren Buffett invests in Apple. Google has been around, but Google's only started paying dividends for the last 2 years. Well, you figure it out. 2 years of dividends? Well, how is that supposed to show me that they're consistently profitable? Doesn't. And I'm not going to read all the quarterly reports. No, thank you. What else do we have? What is the theta mean in option trading? Theta is the amount of time decay. As the days go, here's a good one for you. As the sands go through the hourglass, so do the days of our lives. Same thing. It's a decline in the value of the option directly related to the time value. Bar down 360, someone else gets it. Thank you. APO, we looked at that one. After today, I think Smith & Wesson should be a buy. I think so too. It's a 2T asset. No TT asset has ever failed. I really honestly don't care. If it doesn't have dividends and it doesn't have 2 decades of consistent profitability, for me, you want to invest it, you do whatever you want. I'm just saying, for me, it's a no. Because there's 10,371 different companies. And out of all of those, only about 300 have been consistently profitable for over 2 decades. I've been a licensed stockbroker for 2 decades. Really don't care. I've been trading for over 3 decades. You want to play this dick measuring thing? I have no problem with that whatsoever. You're going to need to come at me with a little bit more information. 6U, 7U, 6U, blah, 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 blah. Just turned 18. What's the best advice you can give me? Education. Education. That's it. Find out what you want. Make a decision what you're willing to do in order to get there. You're 18. You want to put 20, 30 bucks a week away for the rest of your life? You'll be doing good. Depending on where you put it. That's a big one. I got 4,000 on my account. How do I scale up on NASDAQ futures? I don't do futures. I don't do futures. I don't do quick contracts. I don't do, what's that other one? Forex. I don't do that. I don't do cryptocurrency. There's a lot of things I don't do. But what I do is investing in good quality companies, good quality American companies that have been around for over 2 decades and are consistently profitable. That's it. There are so many trading strategies out there, so many people online sharing what they know. It is up to you to find out what you are okay with, what you believe. Okay? Because we're all different. We're all on a different path. We all have our own choices to make, but we all do have to pay to live here. And at some point, you're going to go into work and they're going to say, oh, no, 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 no. You stay home. You are too damn old. It's time for you to retire. It comes to everybody. Or you either, okay, you got three ways to retire. One, age out. It means you get too damn old to work. Two, you toe tag out. That means you die on your way to work, you die at work, or you die on way home, coming home from work. And you don't get to retire at all. You get any fruits of your labor. Or three, you can take this job and shove it. You make enough money where you can walk away because of the money coming in from your investments. It's up to you to decide which way you want to do. Me, I did the third one. I had enough money coming in from 1% a week to take care of my own personal bills. Somebody had said, hey, why don't you share the information? See if people like it. Well, apparently they do. I've been doing this for a couple of years. You riding with Open this week. Nick, I don't even know if I like Open. OPEN. Let's see what it looks like. Open Door Technologies. Now imagine that. There are no dividends for Open. So considering this is a dividend channel, no dividends, no thank you. That's a no. What else we have? Look at NASDAQ. Ham sandwich. Why am I looking at NASDAQ? And which specifically part of the NASDAQ am I looking at? How far up is he into the questions? Is there a long wait? Sorry, dude. I got 6 channels. See, I'm broadcasting on 9 channels. I got 6 that I can actually read. I can't read the other ones because they're going through Open Broadcast Service, and I have no idea how to do that one. NASDAQ 100. Okay, ham sandwich, you got to give me the ticker symbol because I cannot put NASDAQ 100 in there. You actually got to be a ticker symbol. I think it's NDX. Is that right? Monica, how you doing? Shamir. Colby. Uh-oh. Oh my God, really? JEPQ. Do you guys even do any research on what you guys are buying? JEPQ. Another one. Seriously. I'm concerned for people. I really am. JP Morgan NASDAQ Equity Income. Now, can you see this okay? 2022. That means this thing is 3 years old. 3 years old, that's it. Let's take a look at the numbers. 37, 34, backwards. 40, 54, 38, backwards. 68, 54, backwards. 57, 44, backwards. 43. I'm going to quit there. Apparently, you don't read financial information about where you're putting your money. Why the hell? Number one, it's only a 3-year-old company. 3 years old. And it's not consistently profitable. Look at the numbers. So, no. No, sorry, dude. Sorry, Rick. Your residents. Hey, Hakuna Matata's in the house. What is a safe, simple strategy exactly? Well, safe strategy is, why do I even answer that question? Safe means it's safe. I mean, you're less likely to lose with a safe strategy. That's what safe means. Simple means, well, it's not very complicated. You can do it in 2 or 3 seconds. Okay, safe, simple strategy. Well, that's about it. Bros. Did we already look at Bros? BROS. BROS. No dividends. No. Oh my, don't know much about it more than like the more you set aside, more profit you can make later. Not necessarily so, because there's something called rate of return, yield, return on assets. There's a lot of different ways of looking at it. You're putting your money someplace. What are they giving you in return? Okay, seriously, what are they giving you in return? That's a very important question. If you take your money and put it into a CD, what are they giving you? 1.5%, maybe 2%. You put it into a high yield savings account, what are you getting? 4%, if you're lucky. Okay, let's go over to here. I got 98 questions here. Oh my goodness. GME, Dylan, come on. GME, isn't that, wait a minute. GME. Isn't that Chipotle? GME. GameStop. Oh, hell no. GameStop doesn't have any dividends. All right. Anyway, let's take a look. High, low, where was it? Where is it? Up, down, sideways, and then she gaps up. Great. Now explain to me, when this thing drops like this, what are you collecting? Nothing. At least the companies I'm looking at increase their dividends year after year after year after year. So when the stock drops, they all drop. They all drop. E and B, no. Enbridge does not have dividends, no. ULTY, YNKMD. Was that a yucky doctor? YMK wants to take a look at MSTY. April 2024. This thing's not even 2 years old, and you want to put your money into it. Oh, wait a minute. You said ULTY. I'm looking at MSTY. ULTY. Oh, yeah, just as bad. Prove that I'm normal. Uh-oh. Okay, ULTY. March 2024. Not even 2 years old. 106. 141. 127. That's backwards. 113. Backwards. 99. Backwards. 78. Backwards. 1, 2, 3, 4. 4. Going backwards. 98. 82. Backwards. 83. 70. Backwards. 57. Backwards. 53. Backwards. 46. Backwards. 10 cents. Backwards. 9. Nah, come on. Do you even read the freaking... I'm not even going to bother with you. Don't even read the damn numbers where you're putting your money. All right, let's go over here. Over here. Hopefully you guys have some better stuff to look at. Right here. Uh-oh. Crypto Curry. SCHD2. We already did that one. Sorry, you know. Did you change timing? No. Didn't change timing at all. I was just traveling. When I'm traveling, I can't always be there. Remy. What's happening, Remy? Alberto. Johnny. I need Oracle under 300. What are my chances CPI takes it all down? CPI? Consumer Price Index? What would this Consumer Price Index have to do with Oracle? ORCL, Oracle. Okay. What about it? It jumped up. And, I mean, don't get me wrong, Oracle's on my list, but now it ain't on my list. I'm not looking for flukes, or what do they call that? Diamond in the rough. Black swan. That's like a black swan. From 240 to 340. That's over 40% increase. But I'm not quite sure what you want me to say about this. It jumped up, yeah? So, big deal. They all jump up. Maybe not this degree, but still. Here's the high, here's the low, here's where it was. Here's where it is. Look at the motion. Up, down, up, down, up. Okay, where's it going next? Well, with a jump up like that, more than likely there's going to be profit taking tomorrow. More than likely. And look at the volume spike. Holy, see the blue down here, that's volume. Look at today's volume spike. Wow, that's huge. So the question would be, why did it jump like that? And what do you do with that information? Okay, it's not what I'm going to do, because I'm just going to ignore it. Because eventually that will come back down to this area. Eventually. And I'll look at it then. So not at the moment. IMG, how you doing? Johnny, that's not what I like to hear. Johnny, I'm terribly sorry if you don't like to hear it. It is what it is. You know, here's the bottom right here, 120. Jumped up to 260, profit taken right here. Then she shoots up, and then she shoots up like this. Well, eventually, it's going to turn around and come back down again. Patience is a virtue. That's not going to stay up there forever. I mean, there's a slight possibility that it could. Sorry, Oracle is too high right now. Yeah, it is. What do you do if the stock drops significantly below your strike price? Okay, DBRM, I don't ever take losses if I can help it. I will roll. See, I took my IBM, which I bought at 285, and now it's at 250. Well, I pushed it out all the way until October, and I increased the break even for whoever's on the other end, where it's kind of uncomfortable for them to buy it from me. So it doesn't make sense for whoever at the other end to buy it from me. So I saved myself from losing. Also, I pushed it out over a month and a half. Okay. So it allows me to keep collecting the dividends, and eventually the stock will come back down again. And when the stock comes back down again, then I can get out of that position. Timing. Don't be in such a hurry. Stock market's been around for over 400 years. Okay? And if you're not ready to retire, what are you worried about? And if you are retired, you shouldn't put everything into one basket. And if this shoots up, now you're stuck at a couple of months, well, wait it out. You should have other positions. I never put all my money in one basket. I waited out. When I went to dump the puts, Robinhood had to warn me it's volatile, like I didn't know that. Yeah, I understand that. I get that all the time. They're just trying to protect themselves. What do you do? Okay, we already did that one. No, and I don't take a loss. Miss Germ, how are you doing? Hakeem, how are you? Slick Ricks. What's going on, Slick Rick? J Villa in here. How you doing there, J Villa? What's going on? All right, let's keep on going. Marcus, what's going on? Lorenzo, Kevin, William. Oh, Ketsuna. IULs. I love IULs. I would prefer VULs if someone actually... See, if you do research on a VUL, you're supposed to be able to put that money somewhere you choose. They don't let you. When they say, well, let's put it somewhere where we choose for you to put it. Yeah, no, I don't like that idea. IUL, you got to pick the index, depending which index you want. But a VUL, it says in the definition, okay, in the definition, it tells you what it is. You should be able, in a VUL, well, I want to put X amount in Microsoft. I want to put X amount here. I want to put X amount there and X amount here. They don't let you do that. They say, well, I got that. Who did that one? I forget. Okay. With the VULs, at least all the ones that I looked at, they tell you, well, you can put it here, you can put it here. I don't need you to tell me where I want to put it. The idea of a VUL is supposed to allow me to put it where I want to put it. So I'd like to find someone that does a really true VUL. All right. How can I learn the system? Okay, DBRM, just keep showing up. Papa P Grills, what's happening? QUBT. Qbert, huh? QUBT. What is QUBT? QUBT. Quantum computing. Uh-oh. Why does that sound familiar? QUBT. Let's find out. Oh, imagine that. No dividends. So why the hell are we looking at it? Why are we looking at something that doesn't have dividends? Because if the stock goes down, I want to be reassured that I'm getting something. So absolute worst case scenario, I get a higher and higher dividend every year. I get no dividend with this whatsoever. So why am I looking at it? How long are your expiration dates when you butt options? Okay, are you saying buy options? No. I don't buy options. I sell options. 80% of all options expire worthless. I do not want to buy them. I want to sell them. So if I sell you something and there's an 80% chance that it's going to go to zero, it's going to be worth less, well, I get to keep all that money. If I buy something, it's going to be a 20% chance that I'm actually going to be profitable. Yeah, I don't like those odds. I would prefer to be on the 80% side. But that's me. Call me weird if you like. Dr. S wants to take a look at Apple. AAPL. Here we go. Okay, interesting. I'm going to say no for this week, but there's a footnote that comes along with it. You ready? Here we go. High, low. Where was it? Where is it? Look at this. Up, down, down. Okay, here's the top here. Now it's dropping. Okay, fine. What's the number look like? 226.79 to 227 is right there, 3 1/4. If you like Apple. However, look at your last 30 days. Here's your bottom, shoots up, pulls back, shoots up, 4 days to the downside. So here's the little footnote. As it drops, eventually it'll find a bottom, wherever it is, and turn around, go back up, just like it did here. It went up, came down, here's the bottom, and then it went up. Well, now it's going to come down until it finds another bottom and goes back up again. It's just like a waiting game. Well, you know, I'm going to write this one down for next week because that should find a bottom relatively quickly within the next day or so. Or more. All right. Apple for next week. What do we have? I think it's weekly expires. Aries, I don't know which one we're talking about. Do I like SCHC? Hell no. Check the numbers, dude. Did you change timing? I have no idea what you mean by did I change timing. Okay, you got to be more specific about that. RC Travers. Remy the Bulldog. What's going on? Alberto. Johnny. I need Oracle. I already saw that one. Low chance, blah, blah, blah. Already went. When I wanted to dump. Uh-oh. Okay. Hello. Just Marcus. We already see these. IULs. Yep. Tesha. Open? We already looked at open, Tesha. Sorry. Lorenzo. BX. Isn't BX Blackstone? BlackRock? Blackstone. Yeah, I was right. Blackstone. Okay. What about it? Let's take a look. Here's the high. Here's your low. Here's where it was. Here's where it is. Look at this. Up, down, up, down, up. Okay, it's an upward trend now, but how far is it going to go? Don't know. Well, let's check. 178.23, 177.50. Let's go for 350. I'd lose $1.25. Take $1.25 off that. Yeah, that's going to be more than 1%. All right. Well, let's take a better look. See, the numbers work. See, the chart, and now it's going up. It's definitely an upward trend at the moment. 178, the 177.50 is going for 350. So let's see what that looks like. But let's check the numbers first. A year ago, 141.61. High of the year, late November, 201.34. Bottomed out first week in April. 116.69. Shoots up, pulls back. Shoots up, here we go. Last 30 days. Last 30 days. What do you think now? See, the 30-day time frame gives you a different perspective. Okay? Up, down, up, down, up. Well, look at right here. 166 is the new bottom. So 166 to 180. That's a $14 increase. Okay, with that 8%, it's an 8% increase. When do you think profits are going to start? 8%, 9%, 10%? I don't know. It's up to you. It's a choice you got to make. But let's take a look at it, the 177.50s. Let's get rid of this. Change it back to covered call. And the 177.50s right there. One contract right there. Market. And here we go. Buy one covered call. Blackstone 100. That's the weeklies. 19 September. That's next Friday. The 177.50 call option. That's the one we're selling at the against the stock, BK, at the market to open. Okay, profits 309, 17,000 is the investment. Well, let's check and see what the rate of return is going to be. Okay, so the rate of return, we take the profit 309 divided by the investment, cost of the trade, including commissions and fees. Oh, by the way, in case I didn't mention it, well, I know I didn't mention it, but here we go. This screen here is live on YouTube. So if you can't see these little tiny numbers, okay, you probably can't see them on your phone or your iPad, but it is live on YouTube. So if you have internet connection on your television, you can see it on your big screen TV, if you like. Okay, take the profit, 309. See, max profit, 309. Cost of trade, including commissions and fees, 17,440. So divide it out. What is the rate of return for this thing? 17,441. 1.7% for 1 week. Now, is 1.7% for 1 week okay with you? Well, that's got to be close to 90%, 80% per year if you're okay with that. Well, let's keep on going. Lumina wants to take a look at Ford. Gotta get back to the beginning, and we're gonna put Ford in right here. Ooh, I'm gonna say no to Ford because we got a top right here. Now we're going down, okay? Sorry, just keep your eye on it because maybe in a couple of days, she'll hit here, turn around, go back up again. And what's the number look like? 1142, the 1150 is going for 16. That's more than 1% if you like Ford at this price. It's always going to come down to that. Do you like the company? Do you like it at this price? Does it make sense? Is it something you want to do? No, it's not for everybody. It's slow, it's boring, it's monotonous. It's the same stocks over and over and over again. You take a look at my trades. Now, I do share 3 accounts publicly, so you can see every trade that I've made over the last 2 years. Okay? And yes, Ford is on there. I do Ford a lot when the numbers look right. See? She goes up, down, up, down, up, down, up, down. So it's going to find a new bottom, and then she's going to turn around and go back up because that's what stocks do. They go up, they go down. They go up, they go down. That's it. They don't do anything else other than going up and going down. All right, next. All right. Kitsune. Okay, IULs, we already talked about that. I'm in Forex right now. Good for you. I don't do Forex. Is it gambling? I can't tell you about Forex because I don't do I tried it years ago. Too much effort for too little money, in my humble opinion. And it's all news driven. Okay, you get a tidbit of news. You got to beat the other person to the pips. That's about it. Okay, because something happens in the news, somebody's already acting on it. And it's just too much. Too much for me. SLB. All right. Tension 12 wants to take a look at Schlumberger. Now, SLB, Schlumberger, is a dividend king, which means 5 decades of consistent profitability. When Schlumberger pops up, Yeah, I'm all over that one because it's a safe company, in my humble opinion. If you are profitable for 5 decades, that's 50 years. Some of you haven't even been alive that long. 50 years, year after year after year after year, profitable. Higher profits every single year. That's the only way to become a dividend king. And Schlumberger is one. You may never have heard of them before. You may never invested in them before, but they are a dividend king. Anyway, high, low, where was it? Where is it? Up, down, sideways, then up. Okay, 36, 36, 85. Oh, yeah, that's over 2%. Okay, well, let's see what the numbers look like. Now, just because this looks good, well, I got to rely on the chart. Is the chart telling me it's the right time to buy? Because I don't want to buy it when she's dropping. I want to buy it when she's at the bottom, turns around, goes up. Because they all do the same thing. They go up, they go down. So just, if you like a company, keep your eye on it. What is it doing? Does it make sense? Where do you think it's going to go next? So by looking at something day after day after day after day, well, you get a good idea of the pattern. When does it normally move? Is that move going to be profitable for me? It's the same questions over and over again. A year ago, $39.96. Let's call it 40. $39.96. Really? 40 bucks. 40 bucks a year ago. 46.19 was the high back in November. Bottomed out first week in April. They call that TDS week. 31.08 shoots up. 38 pulls back to 32. Look at the last 30 days. Right there. What do you think? High, low, where was it? Where is it? Look at the motion. Up, down, up. Okay, here's your bottom. Shot up, here's the high. Now, once you get to a 30-day high, there's usually going to be profit taking. Because when a stock jumps up, well, what do you think is going to happen? Look at the numbers. 32 to 37. That's $5. Now, you might think $5 is not a lot. Context. Context and perception. $5 is not a lot. But a $5 move on a $32 stock, well, that's over 15%. 15%. Yep, I'm taking my profits. Comes down, turns around, goes back up again. That's what happens. The stock goes up far enough, people start taking profits. Well, think about it. If you bought it and it went up 15%, 1 week, 2 weeks, 2 weeks. Okay, 1 week, 3 weeks. Okay, so here's the bottom. 1 week, 2 weeks, 3 weeks. That's 5% a week. Increase. Yeah, I'd take profits too. All right, Huckleberry. Oh, hacked by Lavar. 70 a month easy. Okay, not quite sure what you mean by that. I'm guessing you are not a fan of Yield Max or NEOs. Are they consistently profitable? Are they more than 2 decades old? Okay, it's a simple question. If you're going to you can put your money anywhere you want. You do. I will take a look at it and I'll give you my personal opinion. But remember, it's just my personal opinion. It doesn't mean anything. Absolutely nothing. You shouldn't listen to me anyway. Do your own research. Does it make sense? I'm saying Yield Max doesn't have consistent profitability. That's all I'm saying. Now it's up to you. Either believe me or go check it yourself. Let's go check it out yourself. What's Yield Max? YMAX. 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 Yield Max Universal Fund Options, ETFs. Okay. Let's go all the way back to, really, February 2024. Is that right? So this thing hasn't been around for 2 years either. So I'm kind of curious. Yield Max, February 2024. thing's not even 2 years old yet. And you think it's a good place to put your money. There's nothing wrong with it if you like putting your money into a company that's not even 2 years old. Okay? Because most companies don't make it to 3 to 5 years. 1 in 100 will make it 10 years. This thing's not at 2. Let's take a look. 53, 56, 63, 73, 73, 65, 59, 22, 22, 20. Did you notice it keeps losing money? I'm just going to leave it at that. What do I think about yield max? What do you think? 53, 56, 63, 73, 73, 65, 59, 27, 22, 20. And you think it's good. You do whatever you want, brother. Let's keep going over here. What do we have? ENB, you already said no to that. Alan, good evening. Hope your trip went well. My trip was wait a minute. The only issue I had with my trip, when you get to Canada, you need, what did I get there? Mark. No, what was it, Mark? Okay, can't read it. Anyway, when I got to Canada, I found out that my cell phone didn't work in Canada. So guess what? I couldn't figure out where the hell I was going. Good thing I had played. I got there like 11 o'clock and they didn't close until like 5. So I had between 11 and 5 to get from the airport to the marina. And it was supposed to be a 15-minute drive. So I went towards the water. So you get off the airport, you head towards the water. Someone's got to know. So I got towards the water. I asked some guys, oh yeah, it's about 5 miles down the road. Okay, drive 5 miles down the road, I got there. But getting from the marina to the hotel, yeah, without a cell phone, it brought me back to the days in the 70s and 80s, the 70s, where we didn't have cell phones. We didn't have all that. We actually used regular maps, and we stopped and asked for directions. It is what it is. All right, you made me laugh. Thanks, Rhino. What are you talking about here? All right, L&V Renovations. Good evening, and how are you today? What we're talking about here is simple, safe, predictable investing for a 1% return every week. That's over 50% per year using nothing but pre-qualified dividend stocks and a safe, predictable, consistent trading strategy. That's what we're talking about. Oh, what are you talking about? We already said that. We already said that. ENB is a solid dividend. ENB has a solid dividend. ENB, Enbridge, that right? ENB. Oh, well, maybe I spoke too soon. Hold on. Wait a second. There's a reason why I don't like it. What is it? ENB. That's it right there. I don't do monthlies. September, October, January, April, January. I knew there's a reason I didn't do Enbridge. Now, the reason I say I don't do monthlies, let me briefly explain for those of you who don't understand. Monthly. Well, let's take you back to grade school. How many months are there? There's 12. If I'm getting 1 to 2% every single trade, 12 trades, that's 12 to 24% per year. Correct? 12 to 24% per year. Some of you might like that. Well, let's go back to elementary school again. How many weeks in the year? 52. If I'm getting 1 to 2% every trade, well, that's 50% to 100%. Also, okay, you ready? This here, let me go over this side. This here is 30 days. Now, follow me if you will. 30 days ago, we're at 47. Shoot up to 48.20, drop down to 46.60, shoot up to 48.20, drop down to 47.20, shoot up to 48.40, drop down to 48, shoot up to 48.59. Now, tell me, where is it going to be in 30 days? Because a monthly option is every 30 days. This is 30 days. Up, down, up, down, up, down, up. Where's it going to be in 30 days? Not that easy, is it? I don't do monthlies. Number one, they're hard to judge. Number two, they don't pay worth a crap. 48.59, the 50s are going for 0. That's okay. Let's go to the next one. This one here, a little over a month. 48, closest one's going to be 50, 35 cents. That's not even 1%. And I got to hold it for 5 weeks. I don't do monthlies. They just don't pay. And it's hard to judge where they're going to be in 30 days. I don't like monthlies. They just don't work. The chosen one, bull. Bull. What are we talking about? Bull. B-U-L-L. Hell no. Okay? If this thing is way down here, Webull, they don't have dividends and they haven't been around for 20 years yet. No. No, 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 no. No, sorry. YouTube name, Dividend Stock Talk. Oh, this a loop? I have no idea what this a loop means. My best friend 619. CoreWeave. You got to give me the ticker symbol because I'd like to tell you no now, but you can give me the ticker symbol. I can pull it up and then tell you no. I've looked at CoreWeave many times. It just doesn't fit. Steve, TSLL. TSLL. Now, most of you know I don't do Tesla because it doesn't have dividends. However, I gave my big speech last week and the week before. I cannot keep ignoring Tesla. Can't do it. Because even though they don't have dividends, there's no way of escaping the grasp of Tesla. Well, what do I mean? In 100 years from now, who's the first person to get to Mars and colonize it? Who do you think? Tesla. Can't get away from it. Okay? He's got that drill boring machine, so he can bore into the what do you call it? Into the big rock, see what's on there, and also colonize it with his robots. Solar electricity, electric cars, and rockets. He has everything he needs to get there. I can't keep ignoring. So yes, I do trade TSLL because it's directly related to Tesla. But let's take a look. High, low, where was it? Where is it? Look at this. Up, down, up, sideways. Now I've been trading for the last couple of weeks. It's going sideways. Well, let's find out. Before we do, look at the numbers. 13.26. The close one's going to be the 13.50. It's going for 61 cents. That's over 4%. Well, let's check it out. We opened up 10.62 a year ago at a high at 41. Then she dropped all the way down to 6.30. And then she's going sideways for the past couple of weeks. All right. Well, the last 30 days, right there. Here you go. High, low. Where was it? Where is it? Up, down, up, down, up, down, up. 13.26. The 13.50's right there. 61 cents. Let's see what that looks like. Holy cow, it's 1 o'clock in the morning. And I'm still here. All right, we just dipped below 200, so that's a good place to quit for the night. All right, so let's take a look. 13.50, let's get rid of this. 13.50, covered call right there. 13.50 right there, one contract. Market, here we go. This will be my last one for the night. Then we're just going to answer some questions, all right? Buy one covered call TSLL 19 September 25. That's next Friday. The $13.50 call option. Well, the stock's at 13.26. See, when I buy something, I'm going to buy it $13.26, and I'm going to refuse to sell it to the day I die or until it hits $13.50. What do you think is going to come first? I think it's going to hit $13.50. Well, anyway, $13.50, maximum profit $70, cost me $1,280. All right, so let's get the calculator out for a second. $70 divided by my investment, 1,280, gives me a grand total of 5.4%. So think of it this way. For those of you who are still on the fence about investing in the stock market because you think it's risky, well, let's change our perspective, change our point of view. Let's say, hypothetically speaking, you're not buying stocks. You're buying a weekly cash producing assets, kind of like a vending machine, soda machine, gumball machine, candy machine, cigarette machines. Who remembers those cigarette machines? Anyway, a vending machine. You're paying $1,300 for it. Well, it just so happens that this vending machine, well, it gives you a return every single week. Well, this week it's giving me $70. What's it going to give me next week? Another 50, 60, $70? Maybe. The week after, 50, 60, $70? Maybe. If I keep collecting a premium every single, it's like having a vending machine. Well, except for this vending machine, the only thing I have to do is just come take a look at, what did I buy it for? What option is the closest that I can sell for it? How much am I going to make on that? Is it a safe trade? Where's it going? What does it look like? They're easy, simple questions. It was created for a 9-year-old. So we're not going to look at anything else. I am going to bring up my stool so I can sit down, get comfortable, and maybe answer some questions. Okay, user 359. No, I'm not a fan of yield max, and I just told you why. Simple and consistently. Pedro, thank you. Maher, how you doing today? Hacked by LeVar. Shift through MT4, MT5. I have no idea what that means. Sherry, how are you? Vendu Mart Store. How you doing, brother? NB have 94. Okay. Hacked by LeVar. Definition of. Okay, not quite sure what we're talking about, but okay. M.O. Altria. To look at in the morning. Ooh, I like Altria. I do. You kind of piqued my interest. Interesting. I like that. Thanks. Techno. Tension 12. Justin, what's going on? Hacked by LeVar. I agree. Cool beans. Rest in XRP. Yep. TD. Okay. Best monthly dividend stock. Everdef. What's going on? Hilaki. I don't know. Catechus. Richard Darda. How are you doing? Ooh, do I like T-Row? Yes, I do. We'll take a look at it tomorrow. AMZN, Alberto, Amazon doesn't pay dividends. Trigger Hard, thoughts on Gemini IPO. I don't do IPOs. 20 years of profits is what I'm looking for. The Mysterious One, purchased an auto renewal subscription. Oh, cool beans. I thought it was a question, but no. Matthew, where the real profits are. You're definitely not talking about Realty. That's a monthly, dude. I don't do monthlies. Right on. Behold the dictionary in advanced Rubik's Cube, Speed Cube Tech. Matthew, I'm not 100% sure what you're talking about, but okay. Katamatu. Can you check Altria? It's right there. It's right up on the screen. We're going to look at it in the morning. Wait. So where do I put it? I just tuned in. Illustrious Pete, how are you doing? Where should I invest 20 grand? User 38644. I couldn't tell you that at the moment. I don't know very much about you. I made $1,000 today off of Fib move. Oh, Fibonacci move. Cool. I'm collecting shorts. Yeah, okay. I had a couple extra pair that I'm not wearing. AGNC, Drizzy, I'll take a look at it later. Bodilia? Target. WU. Okay. Adam Hamlin, how are you today? L, what website am I using? That's not a website. That is Thinkorswim. It's a trading platform. Earth Avatar, Shell, tomorrow. Million Rodriguez, Apple. I think we already looked at Apple earlier. Can you check M? Okay, we already did that one. AVAV is hot. We'll take a look at it tomorrow. Can you do Mara? Tomorrow. Shell, 4% dividend. Okay, say, I don't do dividends. Now, I use the dividends to tell me when to buy a stock. All right, I'm missing some questions. It moves them all on me. Amazon, we already did that one. AGNC, we did that one. We did that one. We did that one. WU did that, did that, did that, did that, did that, did that. Oh, take a look. Esoteric Man, Caterpillar. I love Caterpillar. We'll look at it tomorrow. Premium almost 1%. Got that one. Milton, could you keep rolling and keep on collecting? Absolutely. There's no rule where you cannot roll continuously forward, week after week after week. I mean, why not? I mean, I did Kohl's last year, okay, KSS, Kohl's, and I rolled that thing. I stopped and took a look and said, oh, I've had this thing for 14 months. I've never owned anything for more than 9 months. Well, Kohl's this year, I had for 14 months because every single week it gave me more than 1%. QQQI, no. Nope. Ben, what's happening? GW Kush. Yep, I know what that is. GW Kush 420. Dollface. Hi, honey. Thank you. Paul, how you doing? Ozzy, is it better to roll or do a covered call? Well, a covered call is what you roll because you're rolling the option from one week into another. And it's always, Ozzy, about the numbers. What am I buying it for? What am I selling? What's my rate of return? Where's it now? Where does it look like it's going? It's all relatively simple. This strategy was created for a 9-year-old 15 years ago. Okay, and it was so effective. It's like the only thing I do nowadays. Because years ago, I used to trade options, strictly options. Made a lot of money, lost a lot of money. But here's the thing: when you find something that works and works effectively, stick with it. What's the best platform for scalping in the U.S.? I honestly couldn't tell you. Really, because I don't scalp, so I really don't know. But I did write a book about 15 years ago on choosing the right trading platform. Well, because that gave me an idea, because I was, at some point, it's like, all right, if I'm going to do this seriously, I want to look at all the trading platforms and find out what the best one is. So I looked at all of them 15 years ago. Now, some of them aren't in business anymore. Some of them got bought out. But I found this thing over 20 years ago, and it has everything that I'm looking for. AMZ Deals, good evening, and how are you today? New here, well, thank you for showing by. Thank you for stopping by. Thank you for interacting. And, well, you didn't ask any questions, so I'm really not being able to help you out, and I feel bad about that. When you got something you want to ask me, please feel free. Now, I try to get to all the questions. I can't get to all of them because I got way too many questions coming in, but I'll keep on keeping on if I can. All righty. Yo, user. I can't do those usernames. Can you check out? Okay, this is like the 5th time you've asked me about that one. Ace, ABTC. What the heck is that? ABTC. It's a no is what it is. Sorry, dude, I don't do monthlies. Monthlies just don't pay, and this thing was below $1 a year ago. So there's no way this thing has 2 decades of profits. No. Token Lee, we'll take a look at that one tomorrow. Jim, December. Not quite sure what you mean by December, but okay. Crazy Poor Guy, UNH, we'll take a look at that one tomorrow. Duwad Beya, thank you. Bodilio. Target, we'll take a look at that one tomorrow, Bodilio. What else we got? Newman, what's happening? Lorenzo, thank you, you're welcome. Locke, Lowk. Supercuts, how you doing? Lorenzo, yes, all right. William Perez, thank you there, William. Jim, after income tax, I don't know. I say, Jim, if you want to pay income tax, you be my guest, all right? There's something that's called, are you ready for this, Jim? Revocation of election. Revocation of election. Look it up. Okay, at some point in your life, you volunteered, believe it or not, you volunteered to pay taxes. Okay, now you can ask, if I can guarantee you almost 99.9%, you ask any IRS agent, 99.9% of them will not tell you this. Every penny you give to the IRS is considered as a gift. It's not my words, it's right in their book. Go look it up. There's a dude called, hold on a second, Kobe Abbas. Kobe Abbas goes into that big book, and he snippets. He takes little he takes little copies of the actual statutes in that book, right in there. Any money paid to the IRS is to be considered as a gift. Look it up, dude. Also, revocation of election. At some point in time, you volunteered. You say, hey, you know what? I think it's a good idea you take part of my income. I volunteer to pay you every single year. Now, once you do that, you can never undo it. Except revocation of election means I no longer want to be a taxpayer. Now, no longer want to be a taxpayer to the IRS is the difference, because you're still going to pay your property taxes. You're still going to pay your income, your government taxes. And there's a huge difference. No, I'm not even going to do taxes. No. All right, let's keep on going. Stay Lork. What's your name in the TOS chats? I'm on there every day. I'm usually in the futures chat. Stay Lork. I don't chat on Thinkorswim, okay? I'm not that kind of a trader, okay? When I say, hey, this is James, wait a minute. Hey, everybody, my name is James. This is Dividend Stock Talk brought to you by the 10-Minute Trader. 10 minutes. I want to be in, I want to be out. I don't want to hang around and meet everybody. Sorry, okay? I get in, I do my trades, I get out. And I don't chat in the Thinkorswim chats. Mark, how you doing? Lance. Dumfrey, what's going on? B-Man, Ricey Production Dividends again. Okay, you gotta give me the ticker. Is that the ticker symbol? RYCEY? RYCEY. This thing has no options, dude. See that? No. If I can't trade it on a weekly basis and make money on a weekly basis, no thank you. Aaron! Big Gen 59, what's going on? KVI 2323. Lindarella back. Oh, Lindarella, I haven't seen you in a while. Do you have any favorites below $5? We used to do RNWK. No. MPW. That's under $3. Under $5. Riley used to be under $5. Coin. I don't do coin. Hasn't been around long enough. Low battery. Oh no. All right, let's keep on going. Yeah, Sloppy Mike. That's a tragedy. Tragedy. I liked him too. I like people that are straightforward and honest. I do. Yep. Mark, I do. Classes for newbies. DM me your phone number. I'll give you a buzz. I promise you I won't try to sell you anything. What's your call or put on Hood? Don't do Hood. Hasn't been around long enough. Is Target a good dividend stock? Uh-oh. Rodilio. Target, TGT, is a dividend king. That means they have been consistently profitable for over 5 decades. But you got to be careful with Target. Stay away from Target during, what do you call that? Dividends and earnings. Okay, when the earnings are coming, stay away. That's just my opinion. It's not advice, it's my opinion. I got many times. They have what's called a black swan event. What's your thought on hoods? Already did that one. Dad V4. Is there a stock investing for dummies materials you could recommend? Biting off more than I can chew. Okay, Dad 4. I like the book called it's a simple, easy read. Wade Cook, Wall Street Money Machine. Simple, easy to understand. The guy was a taxi driver. Taxi driver. While he's waiting for a fare, he get in to do a little bit of reading. He says, this can't be right. And he found a lot of interesting stuff. Really cool. At 22, yes or no? Okay, Jeff, I'm not quite sure what we're talking about. Lindarella, thank you, James. I'll give them a look. All right. Sounds like a plan. Dad for 4, thank you. Glad you like it. Okay, back over here. What do we have? Jealousy sucks. Okay, thank you for that, jealousy. And live on Facebook. He's not looking at TikTok chat. He's live on YouTube. Okay, jealousy sucks. I'm actually live on 9 different channels. My YouTube name is The 10-Minute Trader. The 10-Minute Trader. Okay, it's on this camera here, and it's on this camera down here, and it's on that camera over there. So that camera over there is a totally different station. This one's a 10-minute trader, and the one down here is a 10-minute trader. But when you roll, don't change prices. Absolutely, Mike. When you roll, don't change the price. He's not looking at TikTok chats. I got that one. Do you like Tony Hawk? Oh, I look like Tony. Yeah, thank you. I've heard that one before. I'm done. That's it. No more questions. I've answered all, except for over here. SoFi, Contrast G. SoFi, same thing. Not profitable enough for me. Hasn't been around long enough. YMAX, same thing. Small, good decisions. I like that one. Best way to learn TA. Okay, my mind went somewhere totally different when you come up to TA. Dylan, who are you talking about with warrants? No idea. GameStop. Premiums are good too, and they had solid earnings. Good night, good night, good night. Oh my, is there anything else we could know before the live ends? I'm not quite sure what it is you're looking to know. Okay, I showed you the trading strategy I created for my 9-year-old. I'm here every night. Sunday night, Monday, Tuesday, Wednesday, Thursday. Okay, I take Friday nights and Saturday nights off. The last 2 days, I was in Vancouver taking a look at a boat. Can you sell the call before the end date if it hits the strike? All right, I'm going to have to think about that for a second. Hold on. I got to run through my head. Technical analysis. Oh, technical analysis. You want to know where my mind went? All right. So, Nizzle, V-Nizzle. All right, V-Nizzle, you ready for this? Most people, or I should say most adults, want to complicate this. All right? Now, when I say I created this trading strategy for a 9-year-old, let me explain how I showed it to my 9-year-old. All right? Now, this is a bar chart. Okay? A candlestick chart. All right? Sideways, up, down, up, down, up, down, up, down. Or you can simplify it. Up, down, sideways. Most adults have a tendency to make it more complicated than it needs to be. Okay, anytime I look at a chart, I'm looking for 5 things. 5. That's it. Number 1, the high. Number 2, the low. Number 3, where was it a year ago? Number 4, where is it right now? And number 5, what's the motion of the ocean? The trail through the woods, the path through the trees, the whatever you want to call it. What is the movement? Up, down, sideways. That's it. Okay, that's the 1-year chart. Then I like to take a look at the 90-day chart. And there's a huge difference between the 1-year chart and the 90-day chart. But I'm still looking at the exact same things. the high, the low. Where was it? Where is it? What's the motion? Up, down, up, down, up, down. Now I want to look at the 30-day chart. Before I look at the 30-day chart, I want to see, is there a pattern? I just showed it to you. Up, down, up, down, up, down, up, down. That's the pattern. Well, that's all stocks do anyway. Well, now let's look at the 30-day chart. Here's the last 30 days. Up, down. Adults have a tendency to make it more complicated than it needs to be. And if you need it even more simplified, change it from a bar chart to a line chart. You really can't mess this one up. Up, down, up, down, up, down, up, down. Green means it's going up. Red means it's going down. If you want to get it as simple as possible, there you go. Which ticker symbol is it? G, Genpact. I have no idea who they are. Dylan, GameStop, Premium. We don't do that one. Is there anything else? Can you sell a call before the end date, the expiration date, if it hits the strike? I'm not quite sure why you would do that. Because it's not making any sense. See, a covered call, you buy the stock, you sell the option. You sell the option. So I'm not quite sure what you're talking about. Can you sell the call before the end date if it hits a strike? Well, I only sell options, and I can't sell something I've already sold. That doesn't really make any sense. I'm sorry. I'm not quite, it's not as, the question you're asking, it's probably clear. Yeah, I sell options all the time. I don't buy them, I sell them, except when I'm rolling. When I'm rolling, I have to buy the one I just sold, and then I sell the next one out. I don't know if that's what you're talking about. That's called rolling forward. When you roll in option forward, you have to buy back the one I sold this week and sell another one next week. You're just pushing it off until next week. That's called rolling. I don't know what you're asking specifically. Oh, The Last Mohican. That was a good movie, by the way, The Last Mohican. Justin, 3331. All righty. So I think I'm done. That's all the questions. Dual Tron, easier. Okay. Seems complicated. I'm wondering if I should jump into Marvel. My favorite. You like that one, The Last of the Mohicans? That was a good movie. Dev. I'm not 100% sure how to make it any easier. My daughter was 9-year-old when she asked me to teach her. So the only way I can think of teaching a 9-year-old is to simplify it as much as I possibly can. Okay, Nick Peddle, I really don't think the market's going to react to Charlie. As sad as it was, I'm still having a hard time with it. I know why it happened. You look like Tony Hawk. Yeah, I know. I got that. He does. Thank you, Andrew. Okay. Anytime you got someone pushing back against the system, waking people up. That's basically what he did. Waking people up to what's actually happening. You're being lied to. That's what Charlie tells you. You're being lied to. And people that are lying to us didn't like it. I'll add it to my list. My thoughts. Thanks, Dylan. I'd jump into Marvel now. Okay. What else we got? Just do a 360. No idea what that means. Tell us wisdom. Already did that. Wake up, people. Wake the F up. If they are still paying a dividend, they are still making money, still profitable. Some companies may pay 2 to 4% per year, but I would be happier with getting 10% one year, 8% the next. Okay, wake up, dude. Okay, that's what you want to do. Nothing wrong with that at all. I'm agreeing with half of what you said. If the company's profitable, yeah, they're going to increase their dividends. 8 to 10% a year, yeah, no thank you. I want 1% a week. 1% a week is over 50% per year. That's what I'm looking for. Okay, it's not that difficult. Okay, stocks go up, they go down. If you're following a stock, if you like it and you follow it and you know what it's doing and what it normally does, well, then it's easier. Okay, it's like having a pet or a plant or flowers. You got flowers, you got to water and feed them. Well, a pet, you got to water it and feed it. Even your children, you got to water them and feed them. Same thing with your money. People spend more time on their plans for a weekend barbecue than they do with their personal finances. Why? You have to pay to live here. You ain't going to get your weekend barbecue without the money it costs to have it. Well, why not take care of your money? Put some time and effort into it. All right, that being said, I'm out of here. You guys have a great night, and I will see you all tomorrow. We're going to do the exact same thing again tomorrow. All right, peace out, everyone. Done over here. Done over there. Come on. There we go. And now, done. And done.